A1 Trading to Tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Poker alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody, welcome back to another live stream. Happy Thursday to you. Hope everyone here is doing well. Markets are continuing their sort of sharp rebound, at least from the lows that we saw a couple days ago. S&P 500, NASDAQ slightly in the green, but mostly flat here for the day. Dollar index is slightly lower, rejecting off a little bit of this resistance point that we've been talking about on the channel. Let's see what happens here. I am all out of my US dollar position, so just kind of on the sidelines and watching and waiting here. We've got a lot of stuff to talk about. We got to talk about gold. We got to talk about silver. I did an interesting poll here this morning on my YouTube channel. The answers kind of surprised me. I'm not going to lie. Let me show you this. Okay, here we go. So look at this. This morning, I asked you guys on my YouTube channel, I put up a poll on YouTube and I just said, what do you trade most? And this was like 30 minutes ago now. And it surprised me that the top voted thing right now is actually NASDAQ, S&P 500, Dow Jones, stocks, options, just like everything equities and stocks, right, is actually the top performer. However, what I like about my channel, I know that there's a lot of channels that are very, very specified. Like there's people who are just like, all we do on this channel is talk gold. On other channels, you see people talk about like only silver. Other channels talk about currencies specifically. What I actually like about the way I do things on my channel is it's a spread out mix. Like we talk about commodities, we talk about currencies, we talk about stocks. I mean, I have my preferences of things that I like to trade the most, but from a macro fundamental perspective, which is really what this channel is all about, better understanding macro fundamentals and market sentiment, not just looking at technicals. You can get technicals all over YouTube all day long, and 50 different channels will give you 50 different answers on what the technicals are telling you. The cool thing about fundamentals, they're not objective either. Like there's some subjectivity for sure in fundamental analysis as well, but we can get a pretty good read out of, economic data reports and how they're falling. That is a little bit more binary in some senses rather than technical analysis, which is up to a lot of discretion. Like if you ask 10 technical traders, like, hey, draw in your levels here, you're going to get some traders that load up MACD, other traders use Bollinger Bands, others use support and resistance, moving averages, RSI. You have so many different ways to look at that. Whereas if we are talking about, for example, let's just say we pull up US economic heat map and we straight up say GDP growth. Like this is an objective number that came out. And I like that about fundamental analysis. I feel like I can sink my teeth and build a strategy more concretely around the idea of forecast was this, actual data came in here, give me a binary output. That is what I love about fundamental analysis, is it can be ranked and filed and scored pretty well. Now, again, you can do that within technical analysis as well, but I just feel that, and again, there is feeling, there's discretion, there's personal choice here. I personally feel, and I would imagine a lot of you guys who listen regularly also feel the same way, that fundamentals helps to better understand the story of the market. We're not elitists here when it comes to fundamental analysis. I don't believe that fundamental analysis is the only way to approach the markets and trade profitably. But I'd be lying if I said I don't think fundamentals are the best. I think fundamentals are the best. They help me personally to best understand the market and to build a trade plan that has, for me, produced the best results that I've ever experienced in my trading has been macro first, sentiment second, and technicals third. Really that simple in terms of trying to guide direction. Good to see you guys in the chat here. What's up, Roy? Thank you very much for being here and being a channel member. Talk about the Dow as well. Got you, my friend. We'll talk about the Dow. Bulent, nice to see you. Thank you very much for that very kind message yesterday. And I just want to respond on camera here to you, Bulent. Bulent left a really nice message just saying, you know, it's the interesting thing about the internet, right, is we can be connected even though, Bulent, I think you're in Turkey. We have people in Africa, in Asia, and Europe, and people in the States, Canada, et cetera. We have people all over, and we can connect over the internet. It's a cool thing about the internet is we can kind of connect and have some sort of through the internet air relationship. And I do hope, and I responded in my comment and I said, you know, that's who my channel is for, is people who are very appreciative of the content. I greatly appreciate you supporting what we're doing here. I'm putting in a lot of work on this channel, and it does feel nice to be recognized every once in a while. So thank you very much for the kind words. So most important thing I learned from Nick this year is headlines in the news mean nothing in the long term. Aaron, that's a good takeaway, my friend, because you know what? It's true. Headlines, right? The difficulty with headlines, they're not useless because they do give you impulses of what's happening in the market. But this is where, like, again, my thing is when it comes to the headlines, what are their incentives? Well, just like my YouTube channel, like full transparency, I make crazy thumbnails and titles because I need your click, right? I need you to come in here and check me out, watch my content. Like I'm not gonna act like that's not something I'm trying to do. I'm trying to get you to watch my content. I think there's great value inside. But there is an incentive to, when you see articles and headlines, there's an incentive to get your attention and to scare people. That is a fear tactic. It works, right? So, you know, that's what all the articles, every, you know, news station, if they didn't do that, they wouldn't get seen. So it's a weird thing, but that's why, you know, we have this AI news feed. One of the characteristics of this thing is leave the fear and the scare and the hype, leave it out of it. That's one of the things that we found really important when building this news feed is I don't want doomsday stuff crowding my thing. Look, you've got doomsday stuff everywhere. U.S. economy is going to crash. Heinsberg, whatever, you know, signal is flashing. What's that? What's the Hindenburg? Is that right? The Buffett indicator. You have all these doomsdayers who have, you know, they've built a whole brand around constantly scaring people about the financial markets. And it works. It really works. It works in our brains. Fear is so good at getting people's attention and keeping people engaged. And, you know, most of the content creators that you will find in the trading space that are really big, guess what? They're more bearish. They're pessimistic. Why? Because it's in our brains. We want to look for the problem and try and find the exit door before everyone else. But what I've found is that price, momentum, and a couple key, simple, fundamental macro factors are way more important than scary headlines and certain indicators saying we might go down, we might go up, right? Here's the thing. I think if we want to stay really locked in to just fundamentals that matter, we can say, Fed, next move, are they going to hike or cut rates? They're going to cut. All right, that's bullish for stocks. GDP growth, bullish. Earnings, ridiculously bullish. Let's see what else. Like that, you could leave it right there. You could leave it right there, and you could say inflation, I guess, right? Inflation, fine. It's not terrible. It's not great. This, you don't need to get super complicated with this stuff because people think that by looking at the repo market, looking at, you know, the Hindenburg indicator, the Buffett cash pile, they read into these things and they think they're so smart because they're like, oh, the turn is coming. And look, eventually you will be right. But that approach, right? If we are going to obsess around these potential voodoo indicators that are telling you the market's going to crash, the doomsday channels will tell you that's all you should focus on, because that gets their attention. That gets people's attention. People want to feel like they know when the market's going to crash before it crashes. Everybody wants to feel like a genius. But what I found in my trading is the smartest thing you can do is to not believe you are the smartest trader in the room. If you do, you are likely to fall into the trap of not keeping it simple and instead thinking you're some brilliant, I called the top on the stock market, etc. Look, eventually it will crash. There's no question. And if you keep saying it, eventually you can say, look, I told you so. But instead, let's look at price and simple macro fundamentals. So when we look at simple technicals and simple macro fundamentals, you've heard this. I know you guys have heard this because it's all over trading land. Keep it simple. But what does that actually mean? Well, in every aspect of your trading, keep it simple. Don't read too far into things. So what I mean by that is, if the crowd is really bullish, stay cautious. If the crowd is really bearish, that's where I start looking for opportunities to be bullish. Technicals, what's price doing? Is it trending up? Is it trending down? Simple filters for trend. There's no magic here. There's nothing perfect about any of this stuff. Nothing is going to predict perfectly what's going to happen next. Risk size, keep it small. Keep it simple, keep it small. Don't go big. Economic data, are things better or worse than expected recently? That's all I need, right? Simple. Now, the Edge Finder is not simple. The Edge Finder is pretty complex because it's doing a lot of data pulls and it's comparing a lot of data points versus forecast versus actual. But the cool thing about the software, it does the hard side of it for you. The collection of data, the interpretation of the data. That's the cool thing about Edge Finder. Is it still simple? I mean, fundamentals are macroeconomics are not a simple concept. They're very complex. So when I say simple, I don't mean easy. I mean simple in the sense that, okay, well, what's the takeaway from the macro? Well, let's look at the US economic heat map and let's determine if the macro right now has been upbeat or downbeat in favor or against stocks and currencies, or the dollar, I should say. Really simple. GDP growth has been surprising to the upside. That is bullish for the US dollar. That is bullish for stocks. Don't get any more complicated than that. You might, because here's an example of getting more complicated. Oh, well, GDP growth is going to slow because in the second quarter or in the third quarter, the fourth quarter, the government shutdown is taking place, and that's going to eat into earnings, and that's going to hurt, companies, retail is going to really suffer. You can do that. You can play that game all day long, but I don't. It's never helped me in my trading to get super speculative and try and be so smart and cute about what's going to happen next. You can play that game if you want to, but I'm telling you, I've never needed to. Keep it simple. What we have right now is GDP data has been coming in better than expected. Look, I know the bear cases really well, and that is also really important. I know the bear case for stocks. I know the bear case for gold, for silver, for the dollar. I know the bear case. I'm not oblivious to it. It's that I'm looking at a set of indicators that keep it simple for me. And I'm not going to jump to conclusions just because I heard on the radio that, the fourth quarter is going to be weak because the government shut down. Well, maybe, but that assumption can get you into huge trouble. You want a quick example? Remember when Trump tariffs started happening and everyone said inflation is going to go crazy this year? It hasn't. Has it risen a little bit? Sure. Has it risen as much as the market feared and priced in that April crash? Not even close. Not even close. So don't try and get so smart that it ruins your trading. You see what I'm saying? I'm trying to lay down some simple facts here this morning. I have my two cups of coffee. I'm ready to go. Manufacturing PMIs came in a little worse than expected. How does that impact our calculations? Well, bearish for the dollar, bearish for stocks. Keep going. Services PMIs. Yesterday we had a smash hit on services PMIs, much better than expected. Bullish for US dollar, bullish for stocks. Okay, retail sales numbers, how were they? Good, better than expected. Bullish for stocks, bullish for dollar. Move on to the next. CPI. CPI came in lower than forecasts. Remember, markets operate based on expectations versus actual. Inflation came in a little softer than feared. That is bearish for the dollar. and bullish for stocks. Bullish because people love lower borrowing costs. It's good for consumers. It's good for etc. Let's keep going. PPI, right? PPI came in much better than expected, although this is a little bit outdated data, but still, we'll take it. Bearish for the dollar, bullish for stocks. Keep going. PCE, wage growth, and unemployment rate. All three of these indicators came in line with expectations. Move on to the next because those are all neutral. Keep it simple. We're just going line by line here, understanding the data. We're understanding the macro in a way that I wish 10 years ago when I first started trading, I had the tool that I'm showing you. That's why we built it, because it keeps it simple. Jolt's job openings, better than expected, strong, but again, sort of outdated data, talking about a month-old data. Still, though, we'll take it into our calculation. Bullish for dollar, bullish for stocks. ADP numbers, nice beat yesterday. We'll take it. Bullish for stocks, bullish for dollar. Non-farm payroll, very outdated data. We're really hurting for another NFP data, although very weak in the jobs market department. So bearish for stocks, bearish for dollar. Everything considered, calculated for us, right? That's the beauty of Edgefinder. It's why you should purchase a copy during our Black Friday sale. It's going on right now. The US dollar is getting a modestly bullish view because most of our indicators suggest some strength for the dollar, and a very strong majority of our indicators suggest stocks are still potentially looking good. The macro still looks good for stocks. Okay. So yes, I am aware Warren Buffett is sticking a bunch of cash in his portfolio. I'm aware that Michael Burry shorted some of the AI names. I am aware that, the Heidenberg, I can't remember the name of that. I keep forgetting it. That indicator is flashing some warning signs. I'm aware that, people are struggling to get jobs. I'm aware that, there's big political shifts happening in New York City. You can play that game. You can stare at that stuff all day long. Guess what it's going to do? It's going to send you like this. Your head's going to start spinning. Stick to the data. Stay simple with your trading. If you want to be a fundamentalist, there are so many rabbit holes you can go down with that. Another quick one here this morning. I'm a shareholder of Robinhood. Beat the earnings, really strong, nice beat, 61 cents earnings per share compared to forecast. Wasn't as good of a beat as last time. Last time the stock exploded on earnings because it had a monster beat. This time around, a modest beat. Not super incredible, not too bad either. I'm a shareholder of Robinhood. We have this in the stock box, by the way. Everything I just showed you, again, if you are serious about your macro fundamentals, get a copy of the Edgefinder. Here's a chance to get it for 45% off. Stream viewers who are with me live can take advantage of our biggest discount of the year. That is 45% off. We build some of the best tools. I'm a little bit biased because, I built them. We built some of the best tools, I think, in the trading game for the retail trader. Do you know what Bloomberg Terminal, which has all this data in it, it's an incredible product, but do you know how much that thing costs? It is $2,000. I think it's $2,200, but I'm going to say at least $2K per license per month. Edgefinder is usually, ready? It's usually $1,400 one time to get access to our tool. You do not pay monthly. You do not pay yearly. You pay once. Right now, though, and this is why it's so urgent that I tell you this, right now for a very limited time, it is 45% off. That means it comes down to $770, I think, if you send us a message on our stream while we are live right now. Here's how you can get a copy. Grab it. It's the lowest price we do all year long. You can also add in the VIP signals if you want to trade with us. Come join the chat room, whatever. Send us a message. Let us know. Let the team know. We have a support staff here that can help you out. Let us know if you need access. And the last thing I'll say is if this is too big for you, if you can't do that today, but you don't want to miss the sale, send us a DM and just let us know, hey, can I split that into 2 payments? They'll do it for you. They can split it into 2 payments, make that easier for you. But again, if you've been thinking about like, hey, I want to take my macro to the next level, get our stuff, man. It's worth it. It's worth every penny. I wish I had this tool 10 years ago. All right, let's keep going. Also, if it's easier for you, you can scan the QR code that is below my camera. If that's easier. $24,000 a year for Bloomberg. And it's an incredible tool, man. Like Bloomberg Terminal is amazing. If you've got $24,000 a year, not once, not twice, every year, for Edgefinder, $770. Come on. This stuff's not cheap. Like, I understand. Like, people are like, hey, you know what? This stuff is expensive. Well, let me just give a little bit of context as to why. This stuff, to build this stuff, to have all these data sources and automations, and to build the UIs and to update them and handle all the customer support tickets we get. Look, it's really expensive too. Like, that's the reality of it. But we offer it as at the most affordable price that we can do it. We have a lot of overhead in terms of what it costs for us to build and maintain these tools. And so that's the best price we got all year. So don't miss it. $770. Send us a DM on our website. Scan the QR code below me, or James, if you don't mind just dropping that link one more time for people who want to grab it there. You can also get access to Stockbox if that is something that you're interested in. Again, macro. If you're more of a stock person, you might pick up the Stockbox, by the way. It's a macro screening tool on here that we can like filter for like ETFs and things like that. Like, you can look at valuations of specific companies if you want to look at the stock analyzer. Like, I was looking at Hood this morning. It's not a cheap stock, man, but it is now a profitable company. You know, and overall, the earnings growth is pretty on fire right now. It's one of the hype stocks that I actually like. Like, I'm not a big fan of your quantum computing stuff, because I just can't wrap my head around it. But Robinhood, I like quite a bit. It's a company that is, just killing it in terms of growth in revenue and earnings, etc. But yeah, historical PE ratios, this is another thing, right? If you want to talk about doomsdayers, people who are scared of the market, think it's going to crash, it's valid to point out that PE, price to earnings ratios, in the United States for the US stock market are very expensive. Technology stocks, XLK is a tech ETF. Technology stocks are at some of their most expensive levels. I think they're at their most expensive level as a collective in many, many years, right? And so what you can see here is that we're in the 90th percentile. We're talking about stocks are not cheap, man. Any thoughts on Webull stock, Nick? Yeah, I've been watching it. I'm going to stick with Robinhood for now. Although I really like, Webull as a platform. I trade on it for 5 years, 6 years now. I love Webull as a platform. So I actually, full transparency, I'd like to buy the stock if it has some sort of big drop off, but I haven't really looked at it too closely recently. And I think just in general, I'm not really investing in stocks right now. So let me follow up. I'm trading stocks long. Like, I'm still bullish on the NASDAQ in terms of a trading perspective. I don't know why my indicator here keeps getting messed up. Like, watch this. If I switch back to NASDAQ, okay, it's fixed today. Yesterday, it was like defaulting my thing to just mess this up. Like, it wouldn't save my levels on these this long short position thing. Anyways, like, from a trading perspective, I still think that we can kind of push into year's end. And I'm following price, right? So if price crashes beneath these levels, I'm out. Just take the profit and run. Also, I had someone comment recently on one of my videos. He said, Nick, you're only bullish on the NASDAQ because it's going up. And when it starts going down, you'll be bearish. And they were frustrated. And I literally responded and I was like, you are 100% correct, because I'm a momentum trader. If the stock's going up or the asset is going up, I'm definitely more likely to be looking to long than to short. It's really simple. Like, people, again, everybody wants to call the tops and bottoms of things. Stocks are gonna crash right here, and it's gonna. But I don't do that. I don't call tops and bottoms on stocks and on momentum trading indices and commodities. If the thing starts trending lower, you're 100% correct in thinking Nick's going to start looking cautious or bearish on the stock market. You're 100% correct. If the sign is there for failure from the bulls, 100%, I'm going to start looking more bearish. To everyone who hasn't bought the Edge Finder plus Signals, buy it. I've already recovered my money through the Signals. That's awesome, man. I'm glad that it's working for you. Edge Finder, again, it's a tool, man. It's not going to do everything for you, and I would never claim for it to be that case. I mean, you can see me use the Edge Finder in my videos I don't use the Edge Finder as a, hey, Dow Jones is bullish, I'm buying, right? That's not how I use it. Let's do the Dow Jones because someone asked me to do the Dow Jones earlier. So let's do it. So how would I use this very bullish reading from Edge Finder? Here's exactly how. Okay, Dow Jones has a very bullish reading. I'd like to just look a little closer at why Dow Jones is getting such a strong reading. So I can go to my market scanner page and I can select Dow Jones. Okay, we're looking at Dow. What we can see here is that we have a nice confluence of moving averages. Everything is bullish. Nice. I like that. I'm a buyer in that environment, right? That sounds crazy when to new trader version of me, I'd be like, what? You're buying it after everything is already moving up? 10 years in, the answer is yes. I'm not necessarily trying to buy the highs, but I'm trying to ride that momentum because that's where I've had the most success in my trading is just ride momentum and cut it when it doesn't work. Anyways, technical reading looks really good. Seasonality looks strong for the Dow Jones into year's end. The 4-hour and daily chart look good. Okay. Institutional positioning, overall weekly change. We're operating on old data here, full transparency, because the commitment of traders data has not updated due to the government shutdown. I'm really hoping they surprise us with an early end. They just voted for the 14th time to end the government shutdown and have not ended it. I'm really hoping they do that soon. Economic growth signals have been really strong relative to forecasts, right? That's how we gauge this stuff. We look at this versus forecast. So services PMIs yesterday came in better than expected. So economic growth is there for the US, bullish signal for the Dow. Jobs market, not great. So we'll get a bearish reading there. Inflation data. But again, here's the mistake a lot of traders will make. Like, oh, well, the jobs market is bearish. It's terrible. So I'm going to short stocks, right? But you're missing some of the other pieces, right? We want to look across the lexicon when it comes to analyzing markets. So if I look at inflation data, right? Inflation data, CPI came in better than expected. It's a tailwind for stocks. Inflation's staying at bay, at least for now. And so that's okay for stocks. So Fed's probably still going to cut rates, maybe a little slower than previously expected, but that's okay. And we take away, all right, I understand now that the Dow Jones is getting a bullish reading. How would I next use that? Well, I've already done it here, but you can see I've marked up my levels on this chart. Now, I'm already long the NASDAQ, which has super high correlation to the Dow, the SP500, et cetera. So, and I'm also long the Russell. So I don't really have room on the bench, if you will, for another long index trade. But let's just say I'm starting fresh. I'd say, okay, price is responding really positively to this. Prior all-time high, we had the breakout. We filled the gap. We've come down to this area. We found some support here. I'm probably a buyer at that area with intentions of looking for a move back through the highs, okay? So again, all the doomsday stuff might just be keeping you from actually just trading the markets and making profits, okay? What I mean by that is that all across social media, you will find a million reasons why the stock market's going to crash today. And then the next day when it doesn't crash, they say the stock market's going to crash today. The next crash, right? What I'm saying is keep it simple. Do you see what I see? We have really simple scoring, hard data, not worries about, oh, this indicator and yield curve inversion and, oh, banks are getting funded. I had somebody said, Nick, you fool. Like literally my comment section is just pure entertainment. I'm not going to lie. But one person said, like it was just the most disrespectful comment, but it was like, Nick, you're a fool because basically small banks are getting bailed out secretly and it's all going to come falling down. I'm like, look, you might be right. But the problem is people have been saying that for 15 years. Again, will it eventually happen? Of course it will. And those people will come out of the woodwork and say, people who have been short or bearish since 2015 will say, when this market does this, they'll say, haha, I knew it. Okay. So when this move happens and they have been bearish, 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 add in 74 more bearishes, and the market does this little blip down on the big picture, they'll say, I knew it. All those idiots, I knew the market was going to crash. Meanwhile, the guy who bought, and I'm not saying buy with your eyes blind and be an idiot and leverage up. I'm not saying that at all. I'm saying until there's pure price action signals and pure fundamental signals that are showing weakness, right? We stay constructive. So that's my 2 cents on it. Perma bears and doomsdayers across social media are a really great way. If you absorb that content 24/7, that's a really great way to lose a ton of money. It's my opinion. Disagree with me at your own will. Maybe you're right. Maybe I'm wrong. Such is the way the market works. Nick, hands down, your best trader on YouTube. Haters only hate those doing better than. I appreciate it, man. Thank you very much. Don't entertain disrespect, Nick. Yeah. I mean, at the end of the day, it's just embrace a little bit of the idea that none of us know for sure. And all we can do is follow momentum. Do you know how, for me, it's so freeing to just say, I follow the macro and I follow the momentum, and I don't try and be smarter than everyone else. Ironically, it's the people who think they are smarter than everyone else who I think actually lose the most money in markets. Like, I think the guy who's like, oh, you know, all these things, repo market, I don't know, like, you know, the market's going to crash, that guy who thinks he's so smart is the same guy who is getting his butt kicked in the markets. Whereas people who are cautiously bullish, which is a phrase I say frequently. If you're someone who is here every day, I know I've got some of my regular friends here who are every day watching. Like, listen to this for a second. When I say the phrase cautiously bullish, you probably heard me say that a million times. When I say cautiously bullish, what I mean by that is we stay with trends that are working, but that doesn't mean we leverage up and act like an idiot, right? An idiot in this market is saying this market will not go down. AI is the future, and they bet 3 times their account value that the market's going to move up. And when you get a healthy correction, that person wipes out. Cautiously bullish means no leverage. It means patience. It means waiting for markets to come to you. It means managing your risk when you are wrong, acknowledging that you can be wrong. That's what good trading and cautiously bullish means. It's a lifestyle when it comes to trading, because most people are just outright obnoxiously bullish or a doomsdayer, all out perma bear. Do not be either one of those. In my opinion, both of those are a quick way to blow your money. Cautiously bullish. That's the way to go. My opinion. All right. We've got our next show host taking over. It is, of course, the one and only Miko Audu, who's going to be taking a look at some technical setups with you guys. Last thing before I leave, remember that Edge Finder 45% off discount is available for a limited time. Okay. Here's how you can get access to it. Link will be dropped in the chat. And if you need to scan the QR code right below my camera, that will connect you to a real person on our staff who can get you set up with a payment plan. They can get you access to Edge Finder, VIP, stock box, whatever you need. Just don't miss the Black Friday price discount. It's the biggest that we do all year long. And up next, we've got Miko Audu just after this quick break. Stay tuned.
Get over here. Come here. A little closer. Come here. Gotcha.
Okay, what's up, people? Hope everyone is doing well. Glad to be back on the channel. As always, I will go through markets I'm looking at, anything on the watch list I'll share with you. Hint, hint, I'm focused quite a lot on USD and yen at the moment. Of course, if there's any pairs you want me to take a look at, drop it in the chat. We'll be happy to discuss any pairs you're looking to trade, or just want my opinion, let me know. But at the moment, I'm quite heavily bullish on the yen pairs. Looks like at the moment they're correcting, but I'm still very bullish on the yen pairs. And of course, we've seen a lot of upside with the USD. And of course, we've had some news recently that's given us a bit of a kick, but we have found ourselves testing some resistance. So it is a bit of a time to be a bit more cautious with the longs, because after all, this is a pretty big level, and it did send us all the way back to 96 roughly a few weeks ago. So I am bullish on the dollar because I'm expecting this trend to continue. We got consistent higher highs and higher lows, and all I'm looking to do is bet on the continuation of that. I don't want to see this counter trend line break though, because this trend line represents the momentum we have at the moment, and if that does break, then that would open up the door to a more sideways market here for the DXY, with equal highs around the 100 mark and equal lows around the 96 mark. And we could be looking at a market doing something like this. So I'm leaning to the bullish side of things. We've got that momentum at the moment. I'm looking for a bit of a counter move before we do continue. So this is the buy opportunity I'm looking at. If we break through this, that's even better. Can look for some opportunities above that area. But if I scale slightly lower to the 4-hour chart, this is essentially the area I'm looking to buy from, anywhere around 99.6, 99.5, down to around 99.4, 99.3. That's more or less my zone. So maybe tomorrow or probably early next week might see some opportunities around those areas. But of course, DXY is just the instrument I use to help dictate where USD is going. And if USD is likely to bounce and continue, that means of course Euro is likely to do the inverse, likewise with pound USD and other USD pairs, which is the markets I'm interested to trade. So again, Euro USD, have to be super careful at these areas. Let's not forget the market has been bullish pretty much since the start of the year. We have been trending up. This is still our last daily low, which gave us this high over here. So I wouldn't try and be too aggressively short into this low, because we very well could have a bounce from here and see price kick on bullish again. So I'm looking to short, but only if we can reach this area here, which is close to 1.16. So in terms of the USD pairs which I'm interested in, Euro dollar and pound dollar are the top two. I like them both. Structure looks really good, momentum looks good, particularly with pound USD. We've had a really big move in recent weeks there, but Euro looks equally as good as well, but I do need to see these retracements. I'm not prepared to short at the current price both of them are trading at, so I need Euro to pull back to at least that 1.158, 1.116, those levels there for Euro. And in terms of pound USD, I'm looking around 1.325, 1.33, which basically would take us back here. Now, I'm not too sure pound will have that much of a pullback, to be honest. It would be nice if we can get that, but we are looking very, very bearish, especially for all that pound weakness as well. I do think there's opportunities coming alongside on some of the yen pairs, particularly if USD does retain this bias, this bullish bias here. Because if yen is going to be weak, of course, we'll see if that does continue, but yen has been predominantly weak for some time now. This is the yen basket, which is the yen against other major currencies, Aussie, CAD, pound. This has been in a heavy downtrend and does have quite some room to head into if it is going to go further. So if the yen is still destined to continue lower, and we've potentially got a USD about to become strong, well, on paper, you got potentially a strong currency against a weak currency, dollar against the yen. So I do think there could be some nice opportunities, particularly in dollar yen. Other yen pairs we'll get into as well. But I do think there could be some nice opportunities. Now, we are seeing some lot downside at the moment for yen. I was in some longs on CAD yen intraday, which I did get burnt on this morning. I was actually coming into this afternoon when it did hit my stop loss, but I was long on CAD yen here, looking for an intraday continuation back to the high, but looks like momentum just wasn't in my favor. Particularly CAD was quite weak as well. Yen has been a bit hit and miss, but CAD was very, very weak this morning. So probably picked the wrong yen pair to trade in terms of trying to catch that move. And I was eyeing up pound as well, but I didn't want to trade pound because we'll come into the interest rate. So I did want to jump in front of that, especially intraday as well. But yeah, in terms of dollar yen, I think this could be the better yen pair in terms of distance, and in terms of potentially one of the strongest currencies could be trading against the weaker ones. I like the zone we're trading in now, but nothing technical has set up yet. I wouldn't even mind if we were to push back to the low here. That would interest me as well, especially if we can retest that, reject it well. I think on an hourly 4-hour chart, that could be a very smart trade to take. We'll see what we do at this zone here as well. Again, from an intraday perspective, momentum could be looking to pick up. This is a pretty deep correction, so I wouldn't trust that in terms of dollar yen straight away making a push back to highs. We may bounce, but I'm not confident on a push back to highs just yet. But in terms of direction, I'm only looking to buy dollar yen. Only looking to buy as long as we maintain this market structure here. That puts me very, very bullish. We've got this low. As long as we stay above that on the daily, I am very, very bullish as well. Let's see some messages. Yes, we can take a look at euro pound as well. No problem. We'll go through gold and some of the indices as well. We'll take a look at dollar CAD as well. Dollar CAD's been just flying, to be honest, so difficult to find opportunities in that one. But we'll speak of euro pound first, and then I'll take a look at dollar CAD, and we'll go through some indices as well. But yeah, euro pound I'm mostly bullish for because, of course, we've had this breakout. Quite impressive. Euro pound can be a very, very corrective pair. So I'm always skeptical when it does break out. I'm never really trying to be the first one to try and follow that. I want price to build up evidence first, which is basically, if we do have a breakout, I want price to pull back and create another high to show me that, okay, this trend is for real. Sometimes if we have a breakout, we come straight back inside. Because if you just zoom out, look at the context of things, the history of things, euro pound is a market that just does chop around, and knowing that information is quite beneficial. Other markets trend better. You can follow trends a bit more aggressively. If a market is going to be reverting back on itself all the time, well, you have to be a bit careful with breakout opportunities. So I'm a bit skeptical, but we have had a nice pullback since then, and we have created new highs. So at least intraday for euro pound, I'm looking for a push back to resistance there, 0.883. I'm not so confident about a big move or how far price could go because, like I said, it's just a market which I like looking at the short-term moves. Very rarely would I look for a big swing unless we're at some big levels. So I do like the intraday outlook, even if I drop to the hourly chart. I like the way price is finding support here, also coming into a nice zone on the left there. That's acting as a solid base for the market to find support. We've seen some really aggressive wicks. Of course, this here was the news earlier this morning. Looks like things have settled now and looks like support is holding. So this is actually a pretty smart place for a buy, and you can even target back to the highs where we were at news, or potentially the swing high at 0.883. So yeah, euro pound, not my favorite market, but we are seeing momentum starting to pick up. If we take a look at USD CAD, so okay, look at that. So you can see the CAD weakness coming into play there, but also, is that USD strength coming in, or is that mainly CAD weakness? Let's have a look at the DXY. DXY is up here. We are pulling back there. We are pulling back there on the dollar, but I think, yeah, it's probably a bit of a mixture because CAD is pretty weak at the moment as well. If you have a look at pound CAD and euro CAD, they're pushing up. Not anything crazy, but CAD is a little bit weak. But yeah, we are seeing some strength from the dollar coming into play at the moment. So yeah, dollar CAD's having a bit of a boost there, and quite a big one as well, because this was a very, very slow corrective period, very small candles, and then you've got this candle which pretty much engulfs about 20 candles there. So it's a pretty impressive candle there. But momentum is with the buyers. If we expand to the daily chart for dollar CAD, momentum has been with the buyers pretty much since the interest rate. We formed this low, and the price has been ascending since then. We've ripped through the highs, and the trend is very much in full sync. So if you're looking to play dollar CAD, I've been looking for slightly bigger pullbacks. I still am looking for slightly pullbacks, but we're going to have to be patient with that. If you're looking to try and play dollar CAD, I would say keep things simple in terms of intraday pullbacks and looking to follow momentum. The market is already gone now. We're not going to look to chase that. If you're already in the position, great. If you're not in the position, you're waiting for us to kind of settle first, find resistance, hopefully see another type of correction, and then get into the next wave, hopefully. At this rate, there's a good chance price does going to attack the highs again at 1.414. But that is definitely a market that is moving quite aggressively right now. So I'll wait for things to settle, find resistance, pull back against that direction, then we can look to plot some more entries. But yeah, that's a pretty big move. How are some other USD markets reacting? Yeah, NZD is falling aggressively. Aussie's falling aggressively as well. So yeah, USD is looking very strong right now. I thought it was potentially CAD being weak as well. That could be the case, but yeah, USD is definitely pushing hard. Euro USD pushing down, not that aggressively. Same with pound, not that aggressively either, but we are seeing some conviction here. So that USD strength is really coming back into play right now. So again, in terms of opportunities, I would be looking to chase this, waiting for markets to pull back, find support again or resistance if you're looking to sell. And then we can plot some opportunities. I'll go take a look at some of the indices. I did really like US30 this morning, but I missed the trade. I wasn't paying attention. There was a nice buy. I mean, I probably would have been taking out break even, actually. It was on the 15-minute chart. So, yeah, I like the buy here as price came back to support. Retested it. Really nice few wicks to the downside. Ooh, didn't mean to do that. Nice few wicks to the downside, implying price is trying to break through, but momentum is failing. Really strong close. That looked like a nice entry to myself. Also breaking and retesting price structure on your left there. But if I did take that position, I will be trailed out by now because that move would have taken me out of the position. But we are back at support. I would say things are quite volatile right now. Look at the length of that wick. So intraday, I would be a bit cautious, especially with tight stop losses. That could be a bit of a risk. But from a top-down perspective, on the 4-hour time frame, I would say US30. We'll take a look at some other indices as well. But from a technical perspective, price is kind of trapped between a rock and a hard place. You've got some resistance supply areas above us, which look attractive to short from. And likewise, we've got some areas of support demand below us, which look attractive to long from. So I would suggest focus on the buys because that is overall the play here for US30. If you're looking for a short, you're always going to be up against it a little bit. Even if the confluences look amazing, it's just not the best conditions to be looking to short a market in a aggressive uptrend. So I would favor the buys, but I wouldn't be so optimistic, especially if you're trading intraday. I wouldn't be so optimistic to try and hold all the way back to all-time highs. I would say if you can hold for the session or maybe for the day, you might be able to walk away with a decent profit there. You can always leave some positions to run as well. If you're looking for more of a swing idea for US30, I still like the zone here, but I would be looking for price to have one more move down, back into support here, then we'll see what price does. If we have an aggressive move down, again, support starts to hold, wicks, we start to bounce. I think that's a smart place for a long. And you're better prepared in terms of looking for a bigger swing because your entry is further down. You have a stop loss further down as well, so you'd be away from the noise. And of course, nothing's guaranteed, but if you're lower down, it's always better to be fine, especially in a market that is trending very well. So intraday, I would still suggest keep an eye on that zone. I still think that's an area which we can bounce through, which is 47,180 we'll call it. I still think that's the place we can bounce. So if price can come a little bit deeper, I think this is an area which price is likely to bounce, especially maybe on like a 15-minute chart. If you can find some entries there, that'll be a clever place. But if you are looking for more of a swing, I would want price to come a little bit lower. And my analysis will be pretty similar to all the indices, the major US indices, so S&P as well. I said at the start of the week, I like this zone here for a bounce. We've had one, haven't really got going yet. Looks like we're kind of stalling a little bit this morning. So if we could have one more move down, that would be a nice opportunity to look for buys in a similar location, looking for rejection, momentum picking up, finding some entries there. And again, same idea. If this trend is going to continue, you would expect the S&P to drift back to highs eventually, and NASDAQ pretty much similar outlook as well. I like this zone. Brief pause, rip to the upside. We've had that initial test. Looks like we're kind of stalling at the moment, so not really getting that momentum to progress and see a pushback to highs just yet. We may roll over one more time, but I wouldn't panic at that stage. That to me still looks like an opportunity to still pick up longs until price starts to break through structure. You know, these lows here, then yeah, fair enough. I'll throw my hands up and then I'll rethink things, or just pause my buys. To be honest, I wouldn't be looking to sell just yet. I'll need to see some really aggressive bearish momentum for me to do that. But if we do start taking out those lows, that's enough for me to say, okay, maybe let's relax on that immediate bullish bias. Maybe price wants a deeper correction there. So indices to me still looking very bullish. Yes, they might be failing a little bit this morning and struggling at resistance. Hence, they might come back down. And if they do, I think that's a nice opportunity to pick up some longs. On NASDAQ or S&P or even US 30 as well. Some of the other indices like the DAX, I'm not a fan of this one. It's been very, very flat, to be honest. So I don't really have much to say on this one apart from just keep an eye on the range highs and lows. I think that's the smartest way to tackle this market. If you are looking for a long, waiting for price to approach the low, the range is always going to be a safe bet. Anything in the middle is always going to be noisy, so be careful of that. The FTSE has been performing pretty well. Mastad had a nice pullback this week, retesting the prior high, and then has had a lovely push. That's very textbook break and retest there from the FTSE. But yeah, US indices still pointing up in my opinion. Okay, so we'll take a look at, we'll go through gold. I haven't actually looked at gold yet. And we can take a look at, okay, we'll go through pound USD as well. But yeah, in terms of gold, this one has been, yeah, I haven't really been looking to trade gold, to be honest. It's been a bit flat, hasn't really progressed much in the past couple of weeks. Of course, 2 weeks ago, prior to that, we were really, really bearish, seeing a lot of momentum. Things have dried up since then. If you are looking to play gold, especially short term, I do like shorts at the high here. So as price pushes back into resistance, because essentially, again, we have just been ranging. So you don't want to try and overcomplicate this. If price has been ranging, you've been looking to sell the highs, buy the lows, or you're waiting for breakouts. Anything else probably isn't the best opportunity in those conditions. So I would be looking to see if price can reject highs well, and then perhaps capitalize on a swing back into the low of the range, maybe even a possibility of a lower low. Because after all, we have been starting to form some lower highs here for gold. Maybe that could potentially continue. Of course, if you look at the higher time frame, gold is still very much in a bullish climate. And long term, I still am very much a bull on gold. But I do think it's a bit too early to be jumping to longs, at least from how I view the market. This is still very lackluster, not really seeing bullish momentum come into play. If we were to see a strong breakout, let's say if we consolidate for a few more days and then suddenly we see something like that, okay, that will be enough to change my attitude. And going forwards, we could very much be looking for intraday pullbacks for a continuation. But yeah, as of now, I would expect shorting the highs to be the best bet. Of course, we'll see how price reacts, but I would stay away from the middle. Same with silver as well. Silver's been pretty flat too. I would not really be interested in trading silver inside of here, especially on the intraday scale. And higher time frames for silver, I'm a bit apprehensive of going long for like a big swing. Of course, gold, silver, very similar markets, gonna trend in the same direction most of the time. But silver has hit some big heights where it is a bit awkward right now because of where we're trading, the location. If you look prior to this is the monthly chart for silver. Of course, we've just seen new all-time highs recently. Is this the best time to be looking for any long-term plays for silver? I don't think so. Of course, we can break out. We can always go higher. There's one thing to say, okay, maybe let's be cautious about buying. There's a second thing to actually say, let's short the market, or this is the top. Of course, I have no idea if that's the case, but looking at prior history, this is definitely a sensitive area for silver. So from a bullish point of view, I don't mind longs, but I won't be looking for big moves in terms of, okay, I'm betting price back to the highs and further. Let's say if you do get a sharp breakout like this, I wouldn't mind looking for a pullback, for a few days. I'll be happy to bet on that because momentum's picked up. If, however, price does reject highs here and we don't see that breakout, this is still a good place for a short, similar to the gold opportunity we just spoke about. And again, we could see a pushback into this low or a pushback into this low here as well. So silver and gold, very flat, just short the highs, I think is the best play. If we do break out, we can reinvestigate. And as I said, for pound USD, I am still very bearish on this one. It has come back into a nice consolidation on our left, which could be a smart place to short from. I like the rejection here. That hourly candle is about to close as well in about 4 minutes. Not my type of entry. I like price when it pushes into an area, but it's very corrective. So it almost kind of mimics this. And then I try to look to place my entries in these locations here. Of course, with the direction of trend in my favor. So I like the direction of pound. I like the momentum as well. It's not just an ordinary downtrend, it's quite a strong one. So probability is quite high that we're likely to continue, but not quite doing it enough for an entry for myself here, especially on an intraday chart. I did say at the start of the week I was looking for a pullback here, but at the moment it's looking, not looking likely that we'll get that pullback, unfortunately. In terms of the yen pairs, because I did want to touch on the yen pairs, like I said with the yen basket is still pointing down. We have seen a couple bullish days. Today is looking somewhat bullish as well, but the key foundation for trend following for me is market structure. If we're making higher highs and higher lows, or lower lows and lower highs, if we can maintain that, that will maintain my bias that the trend will continue. Of course, if we break structure, that's when I either pause or change bias. And so far the yen basket is heading down, so that's still my direction. And if you take a look at some other yen pairs like pound yen, still giving me higher highs and higher lows, price will need to break through this low for me to change my tune. Euro yen still making higher highs and higher lows. Again, this is a low which I'm still going to keep a very close eye on. Same for Swiss, dollar yen. I've got all these higher lows in place. So I'm not here to trade all the yen pairs. I'm just trying to see which one I can find is the better trade. And so far, I think dollar yen will be the better one, provided USD stays strong as well. So I will keep a very close eye on dollar yen for the next few days. And if this zone doesn't hold where we're trading now, then I'll be looking at a push into 152.960. So we'll be keeping a close eye on that. Gold is the long term now. Gold hitting 4K. Okay, we got some bearish people on gold. Yeah, I would say I'm neutral to bearish. I'm not bullish. Long term, yes, but at the moment I'm not bullish. If gold does reject the highs here, which is 40.50, we'll call it, I think that's a good place for a short. And it does depend on your perspective as well. If your perspective is just for the day, it's different from a trader's whose perspective is for the week, who's different for the month as well. Okay, so in terms of, we can have a look at some of the crosses quickly because I'm approaching the end of the segment. But we are seeing a lot of movement here. It looks like Aussie is a lot weaker and NZD is a lot weaker than Euro and Pound right now. Yeah, Euro NZD's pushing pretty hard. Pound NZD pushing pretty hard as well. Yeah, looks like Aussie and NZD are pretty weak. So that kind of explains why Aussie and NZD are dropping pretty hard. You've got USD gaining strength, but also Aussie and NZD losing strength at the same time. So probably one of the weaker currencies against the strongest ones here. If I look at dollar CHF, yeah, not much of a move. So I do like the opportunities on, I was actually looking to buy USD this morning, but unfortunately didn't pull back enough for me to get a trade. Pound NZD could be one to watch though, because of course USD, Pound NZD, very similar markets. And the fact that USD's about to push back into highs probably could be a bit of a preview of what Pound NZD could be doing in the next coming days. We had another big pullback, momentum's picked up. Perhaps if the trend continues, we push back to the high there. So Pound NZD could be one to keep an eye out, because if that's the case, we've still got a pretty long way to go. Just recently, a nice breakout of that range. That could be a nice floor to look at to place some entries for continuation. So, and you could be looking at, I mean, Euro Aussie I probably wouldn't. This is still very flat. I wouldn't bet on that. So I think Pound NZD would be the better one, at least based on the context of things. Anywho, guys, we have approached the end of the segment, so I will have to love you and leave you. But I really do appreciate having me on the channel. Really do appreciate that, and I hope you have enjoyed the part of my analysis. If you do want to check out my channel, I see Trade Nick has dropped the link to my channel, so check it out if you haven't done so already. But guys, thank you so much for having me. Have a great time, have a great day, and I'll catch you all in the next one.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.